For more insights, let's talk again with our guest, Hong Hao, Chief China Strategist of Broadcom International in Hong Kong. Well, Hong Hao, China's pension fund is buying to A shares, and very interestingly, they're buying some small cap shares and China export shares, which are normally deemed quite risky. What does it tell us? Is it because the valuation is good?
Yeah, it makes some move on some specific stocks. It's very difficult to generalize this move, across to the broader market index, especially the China export. I think if you look at the companies that they bought in, they tend to be larger in market cap. Some of the Chinese company can be quite large in terms of market capitalization these days. The companies that the pension fund bought in tend to be above 10 billion. Yuan in market capitalization, and they're earning 1 billion in earnings. And also, if you look at the first half this year, these companies that they bought in, they have very good earnings growth. Some of the companies are growing close to 50%. So it gives a reasonable prospect of future growth in these companies. And also in terms of valuation, they're about 40 times. They're not cheap, but they're in line with the general China export index. So I would say that they're buying into reasonable sized company with prospects and reasonable valuation.
So how significant is this move? Can we expect good performance in the Asian market? Can individual stock investors just follow the pension fund?
I would say follow them into the stocks instead of follow them into the entire China export. Even so, the China export, had a really good rebound after this news. After all, having a long-term investors showing a vote of confidence in this part of the market that has been underperforming since the beginning of this year is a welcoming news for many investors. So I would say that follow the fund into these companies, and also I think more importantly follow the stock selection criteria that they're using. Just now we discussed they're reasonable size, good growth, and reasonable valuation. So I think there's still many good companies in the China to be had, and also relative to the larger cap index. Just now I mentioned that since the beginning of this year, the China export has a substantial, significant underperformance relative to the large cap. Towards end of last month, end of July, we're actually seeing this underperformance approaching extreme. So from a trading perspective, even there is trading opportunities to be had in this part of the index.
Definitely. Thanks so very much, Hong Hao, for your insight.